Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a day where it's a little bit of a subdued start, you'd have to say, for us for the week. So the Nifty is just about hovering at around 11,000. There has been a little bit of a buy on dips which has come through because the Midcap index has also recovered from the day's low. So there was marginal underperformance which seems to have evened out at this point in time. Let's see whether we build on these gains, but a lot of stocks in focus. Asian pains on account of the GST boost, but besides that, stock is at a fresh high and numbers tomorrow as well. UPL reacting to that $4 billion buyout, HDFC Bank on numbers, recovered from the day's low, Wipro, South Indian Bank, Hero, Hindalco, Inox, all of these stocks in focus. Last three because all of them are at fresh 52-week lows. Hi, Prashant.
Ekta, hi, good morning. Suddenly lots of acquisition, right? I mean, what, almost about $6.5 billion worth of acquisitions coming through for India Inc. But otherwise, I mean, it's a tepid kind of a start. Was higher, and from the high point, the market has come off quite a bit. I mean, just a couple of points, and this is just to take away from where we left off on Friday. This is the big setup. You look at the US market, it remains above some pivotal levels. The S&P 500 especially, I mean, that's pretty much the Pied Piper for global markets. Equity markets, you look at oil, it seems like it's set for more losses. It's lost about 8% over the last two weeks or so. Base metals for a country like India isn't, I mean, base metal weakness isn't necessarily bad news. Copper, I mean, a couple other commodities, etc., also look weakish. And bond yields, I mean, I'm talking about US bond yields across tenures, also look like they are set for some correction. You put all these things together and it does give you some bullish cues, not overwhelmingly so, but certainly not bearish. So I think that's what we are beginning the week with at this point in time. I mean, last week the Nifty, the Sensex were flat, Bank Nifty was flat, the small cap, mid cap indices were down by between 1.5 to 2.5%. So, I mean, the trend has not changed, which is large underperformance from broader markets, and Nifty and Sensex just about holding on. Nifty still about 2.5% away from its life highs. Sudarshan Sukhani is with us. He's with S2Analytics.com. Sudarshan, thanks very much. Good morning. Your thoughts on the way we have started? You know, starting high and then losing is not necessarily a bullish sign. It's actually, if you want to make sort of too much of it, it's actually a bearish sign. But would you read it that way? What would you do?
Well, good morning. Certainly, we did not maintain the early morning momentum, but then you never know. Today is the best day for the markets to rally. There is so much good news already coming around us, and the world markets are not exactly roaring. So if we want to make an exception, today is the day when we should be rallying. With that in mind, there is an intraday trade in the Nifty. You buy it at current levels and keep a very tight stop at 11,020. If it's to go up, it will go up from here. If it doesn't, nothing is lost. But my own personal view, apart from the intraday trade, is that we are slowly and steadily losing momentum. When that finally happens, I don't know. But it doesn't appear as if we are going much higher. So that's the view on the Nifty. Individual stocks keep on giving us opportunities. ACC is a buying opportunity. Cement is giving a sense that it is bottoming out. BEM is a short sell. If you see the charts for BEML, it's been a consistent short, breaking support levels day after day, relentlessly. And JSW Steel is now a short. It's been an outperformer, but it's distributed, and from the distribution it's coming down, and this is happening to most steel and metal companies. That metal and steel is likely to underperform. So that's a short sell.
Okay. Sudarshan, I wanted your thoughts on Hero MotoCorp because that stock is at a fresh low. Numbers come out this week, but nonetheless, what kind of approach would you take on that particular stock?
Well, I would still be a buyer on dips. See, the numbers come out, the stock is weak, but it's a blue chip. So at some point, investors should be looking to buy it. There is no trading opportunity here. Don't make the mistake of buying as a trader, but worthwhile looking at as an investor.
Okay. All right. Well, we have a couple of Twitter queries then, Sudarshan. So let's get that going. Puneet Kapoor holds shares of Hindustan Media Ventures at 183. Wants to know the view.
Well, it's very difficult to answer that because, this stock has been falling for the last 4 days. The best answer is that you must get out of it. There is some reason why strong support levels have broken down, and it's a new 52-week lows. Now, how do you get out? If you have the courage, and then get out now as we speak. Otherwise, wait for a small rally. If it comes about, get out then. But exit you must.
Sudarshan, we'll speak again. Thanks very much for your time. Appreciate you joining in. Rahul Shah of Motilal Oswal is also with us. Rahul, good morning. What would you be doing in terms of trades?
I think the trades in terms of longs, I think it's restricted to few stocks specific, and I think that's the mood of the markets, and those stocks have been performing in last few sessions. So I think we've cherry-picked 2 to 3 stocks from there, and we'll continue to hold on that. Top of the mind is Bajaj Finance, spectacular results, and we've seen one way the stock has been moving up. So stock is in a different trend. I think longs build up in a different territory as well as, and I believe that the stock can still go higher and higher above from here. The longs built up in future segment as well. So I would buy Bajaj Finance with a stop loss of 27.20 and target of 28.50. Second top being TCS. I think IT, we've seen the party post results. TCS had a good rally, and I think still a lot of room for TCS to move up. So I believe that IT will continue to do well, and especially the large cap IT. So IT index looks good. So on that perspective, I would go long on TCS with a stop loss of 1975 and target of 2100. And third stock being from the oil marketing company HPCL. So we've seen this stock hitting 250 levels, and from there bouncing back quite sharply, and now it shows that the worst is over in near term. So my sense is that from a technical perspective as well as the future positions what we see in the F&O space, I think the stock can do well in near term. So with a risk to reward being quite lower, I would buy HPCL with a stop loss of 272 and target of 300.
Okay. All right, Rahul. So we're going to let you go on that note. Just want to reiterate that you have a positive outlook on Bajaj Finance. You have a buy on Bajaj Finance, TCS and HPCL. So all 3 of them. Bajaj Finance, your target is 2850, for TCS 2100, and for HPCL 300. So that's the view coming in from Motilal Oswal in terms of F&O picks. But the big Q or the big news piece that we've been tracking all weekend is the GST Council on its meeting on Friday has slashed rates from 28% to 18% for a whole slew of products. Which are these products? Which are the stocks impacted? And why are they moving? Anisha Jain joins in with a whole 360-degree view. Anisha, over to you.
Good morning, Ekta. Thank you so much for that. Yes, as you mentioned, over 52 items rates was cut from 28% to 18%. Now, the list that I'm providing is not an exhaustive list, just a few stocks and the counters that are getting impacted. Do remember that it might not impact companies' bottom line directly, but this does act as a volume expansion trigger, and that's the reason all these stocks are moving higher. First up, a lot of consumer durables saw the GST rate cut to 18% versus 28%. That included the likes of refrigerators, washing machines, small appliances, vacuum cleaners, etc. Very important to note here that AC's rate have not been cut. They still remain at 28%. A few stocks that are reacting to this particular news bit. Havells is up. Of course, it has its results to back it as well. But other than that, Voltas, Whirlpool, even the manufacturers, the component manufacturers like Dixon Tech and Amber Enterprises are higher. Small electric companies like Eon Electric, Orient Electric, BPL, Symphony, etc. are also trading higher. Other than that, footwear companies are also getting benefited because now footwear under 1,000 have been put under 5% GST slab. Remember earlier this limit was around 500 rupees. So the likes of Bata, Khadim, Liberty and Relaxo should be reacting positively. Paints company, a very important sector to watch out for. The GST is now reduced to 18%. Morgan Stanley, for example, says on Asian Paints that this is an opportunity for acceleration in volume growth. Kotak, for example, on Asian Paints says that the EPS forecast can go up by 7 to 13% for the coming 2-3 years, telling you how important can this be. Moving on, Nomura as a whole says that consumer discretionary segment is likely to get benefited because of this. BofA also says that because of this, they like the rural consumption theme. Also, the fact that politics is taking precedent over economics coming in terms of the elections is also a reason why they think that the rural economy will do better. Back to you.
Okay, that's a long list. Anisha, hang in there. Let's put up the Havells stock. I think we got an alert from outside that it's up, what, some 8-9% or so. I mean, if you can have that one, yeah, 9% now. So 50 odd rupees, 608. 609 on Havells. Anisha, on Havells, it's what, a bunch of things, right? I mean, results top of mind first.
Oh, well, yes, Havells reported a very strong set of numbers. Now, even if you look at the top line, it showed a growth of 40%. Yes, there is an impact of low base as well as adjustment for Lloyd acquisition. And the management said that do not extrapolate it to the entire year. But you can't take away the fact that the entire growth in all the segments has been really broad-based. The major positive was that the switchgear business came back to a double-digit growth. It has been languishing for a long while. Other than that, consumer durables showed a very strong growth, and that was also positive. Lloyd's AC business grew by 14% on a like-to-like basis. Now, we've heard the likes of Blue Star tell us that they might see a decline when it comes to the AC business in Q1 because of the unseasonal rains, and Lloyd has actually showed an improvement both on top line as well as margins. Even the entire margin profile of the company has improved to 12% versus 9%. No wonder that all the brokerages have had a positive stance to increase the target price. For example, Credit Suisse, I remember raises to 725, and definitely you can see the reaction on stock.
Okay, all right, Anisha. Thanks very much for that. That's Havells, which is at a fresh 52-week high. But something like a Symphony should also come up for you. It comes up with numbers, I think, tomorrow, if I'm not mistaken. And maybe there is a positive rub-off with regards to what happened with Havells, though they have said that you don't need to extrapolate the numbers for the entire year in terms of the Q1 performance. But nonetheless, let's listen in to the management themselves from Havells India, and we'll be back.
So if you look at Havells, the adjusted growth was around 22%, and taking Lloyd into consideration, the overall growth went up to 40%. Lloyd obviously had a half quarter last year, so it gives us a better growth. On a like-to-like basis for Havells, it was 22% growth. It was also aided by a little bit of disruption in some of the product categories last year because of the transition from the old excise-based system to GST-based system. So the turnover was low in the first quarter of last year.
More give back. 25 points is all there is left now on the Nifty. 11,034. The Midcap index is down about a quarter. The Bank Nifty is down about a quarter. The Bank Nifty is now flat. I mean, actually in the red. Advanced decline still positive. About 1,070 stocks are higher compared to 911 odd stocks, which are lower, but it's all turning and turning pretty fast. Manisha is here to take us through MCX. MCX was in news for all the wrong reasons last week, Manisha, right? Technical glitches, etc. And you spoke with the management, but they also reported numbers. And we are speaking with the management on those numbers. Manisha, over to you.
Thank you so much for that, Prashant. Well, yes, when you look at the numbers and the volumes, it has been a pleasant quarter actually for MCX. They have forayed into agri space as well, and non-agri has been a strong point for them. And options for commodities were launched in the previous quarter also, and those numbers also are showing slightly positive onto that one. The stock, of course, on your screen isn't done so well, 5% down, and that is because the revenue from other income is something that MCX has not been able to hold on. But Murgang Piranjpe now joins us to talk more about the numbers, the volumes, the technical glitch, and of course the road forward for the exchange from here on. Murgang, hi, thank you so much for joining us. You know, there is one thing that almost everybody keeps going back to, would want answers to, and that is on what really is happening between MCX and NSE. While of course you have come out with clarifications, but if you can throw some more light onto that one.
On that one, we've issued the clarification on the BSE, which is our primary listing exchange. I would continue to say that exactly what we've said there is what I would like to tell your viewers again, that it's something which we continuously evaluate as an option. Of course, the change in the market environment is there from October, and that's why as a board we will continue to evaluate all possibilities. But at this point of time, there is nothing else which we have in terms of reporting, in terms of our regulations that we need to report on this matter.
All right, Murgang, you're not saying a yes or a no to that, but there are other exchanges who would start offering commodities as a segment come for October 1st. We have seen BSE, NSE actually start mock trading as well, and they would want to foray with non-agri space, which has been your strong point all of these years. How are you readying yourself as an exchange for this competition?
The analogy we draw in history is to the Indian manufacturing segment, where car manufacturing segment, where early 90s, we had very few participants, and amongst them a couple of Indian houses, and there was this whole market opened up. What's really happened over the last 20 years is that of those, today we know that 2 of those car manufacturers are amongst the world's largest manufacturers as well. So competition really grows the market. We've seen it happen in many segments, and which is what we think will happen here. In fact, to your last point, the opening up of the equity markets for a longer period of time, we genuinely believe will have a positive knock-on effect, because a larger participant base will be there on the screens and trading. And with the movement that we see in commodity markets, which is linked to the international markets, we believe this has definitely a positive knock-on effect for us. In terms of our market share, clearly in the products that we have, we believe that our strong partnerships in those products, the fact that these products have matured over the years, we have the expertise to manage deliverable contracts, which is something which is absolutely key from today's environment. I think all of this will continue to give our existing products the necessary depth and liquidity that we need to maintain and retain. I think, of course, there could be some very new commodities launched by the other exchanges, and they could be successful, and that's really welcome, because that will grow the market. But at least when it comes to our own products, I think we feel very confident of retaining our liquidity and maintaining what we have in terms of our market share there.
Mrugang, one thing that hasn't worked for the exchange in the last couple of months on quarter clearly has been the technical glitches. Not a good news, clearly. What have you done? What has been the reason for this? And how are you assuring that this is not repeated going forward?
This was what we mentioned earlier, an error at what is generally referred to as the TCP, Transmission Control Protocol. It's something which is somewhere below the application level, around the operating system and the hardware. Having completely isolated this incident in terms of where it is happening, we've been able to put in a solution which actually bypasses that particular components of the hardware which had caused these problems. As far as, therefore, our solution is concerned, absolutely have that confidence. We've reassured our regulators about the same, that we do not think this will recur in terms of the existing infrastructure. Of course, we will continue to be absolutely vigilant and keep looking at more of what we can do so that such things don't happen on the exchange again.
Mrugang, one final question, and what is the road ahead now? Because we've seen options come in the previous week. The numbers, that is the profit for MCX, hasn't been so great quarter on quarter, year on year basis as well. But going forward, what is the exchange looking forward to in sense of improving all of these numbers? What are the new products that are on the anvil now? We feel very good about the fact that we've got a path laid out which the regulators have done in a very consultative way. And the very positive thing about it is that this path hasn't changed in any ways over the last 1 year, and we see that path to continue. And that path is based on 3 pillars of our growth. It is essentially around products where we've seen options come in. We believe index trading in commodities will come in during this year. The second component of that path is around distribution. Bank subsidiaries were allowed. The largest bank subsidiaries are already our members. We are very confident of getting them to trade. We will do that within this quarter. And the integration of subsidiaries of broking houses where they were having one equities and one commodities entities, that integration is well underway. We believe more than 70 to 80% of the market is already integrated, which means that for the retail participant, they already see one single screen, they have one single interface, they get one composite capital to use. So I think all of these are the ways in which we genuinely believe this market will grow. Yes, the institutional segment was a part of this growth that we were all expecting to happen faster. We are cognizant. I think the regulators are absolutely helping all the market participants to make sure that they can understand and absorb and move forward on these products. But that's something on which we will need to see more action in the next 3 to 6 months. We also believe that the commodities segment is probably the most exciting and the most promising segment, so we will stay focused on that. Yes, as and when opportunities come up in the spot markets related to commodities, we will obviously be absolutely eager to grab those opportunities. But at this point of time, we believe staying focused on commodities and growing our market in line with the path that we've seen over the last 2 years and continue to see for the next 2 is the way we will grow our business. All right, Mrugang, we'll let you go at that. Really appreciate you joining us. So that really is the last word coming in from MCX. We'll continue to see more development in case of the commodity exchange. And of course, it really is about the commodity index launch is what they are looking forward for now in this year.
Okay, all right, Manisha. Thanks very much for that. MCX, in fact, reported what was a 70% fall in profit year on year as well as on a sequential basis.